Chris, today's CPI day. You and I both go to Liz Ann Saunders on Twitter to find out what the numbers are because she's so good about it. 3.8 year over year versus 3.3 last month, and the core 2.8 versus 2.6 last month.
Yeah, so inflation up, right? Let's look at the next chart. I mean, what you'll see is 3/4 of the numbers are up by 2.5 or more year over year. I mean, that just implies inflation, right? We know businesses have dealt with it well. Probably half of U.S. households have dealt with it well. The other half, not so well.
Yeah, and everybody at the gas pump is complaining about those things at the top of the chart.
Yeah, so if you look at the yield curve, the next chart, which is really important to all Americans, so stay with me, the 2-year is at 4%, okay? Fed funds is at, call it 3.5, 3 3/4. The market actually thinks rates should rise here. Pay attention to the 20 and 30-year as well, pushing 5. And Darius Dale makes some good points on this in a second. Let's look at the expectations in the next chart for Fed funds rate cuts or hikes. Right?
Yeah.
The market actually thinks rates could rise toward the end of the year.
Yeah, we came into this year expecting cuts, right, based on this information.
And now where we are is there's basically an expectation that rates do not cut between now and December of next year. Now, next year. Now, that could change, but there's an expectation that this new Fed chair is going to do something, and the market's saying, nope, not
Darius
happening.
Speaks to that too, right?
So next chart, Darius Dale, 42 macro, hat tip Darius. Bank credit growth booming. Fed should be reluctant to ease into this condition. Yeah. And then finally, the market no longer views the Fed's policy rate as restrictive. That's the 2-year versus the Fed funds rate. So movement in either direction will likely cause volatility in financial markets. Bonds don't want easing of Fed funds because that's going to...
So a cut upsets bonds.
The long end goes up.
That's
a story for another day, but no bueno. Mm-hmm. And then stocks don't want tightening because you tighten, then that you start to call the multiple into effect. Meanwhile, new incoming Fed chair Kevin Warsh coming in Friday.
Welcome to the Fed, Mr. Chair. Yeah.
So the punchline seems to be, hey, inflation is the story of the moment. You better know what works in inflationary times, and you better. I mean, maybe it makes sense to have a couple bucks of cash too.